experience with you today. Thanks to Mel and Chris for having me. Mel did share with me when I got here, I'm not near as interesting in person as she found me to be on Facebook, which is a great way to get acquainted. So thanks for that. I appreciate that. What I'm going to share with you today is something I've been doing for about 15 years. It is a slightly different twist on what most of us know to be real estate wholesaling. It's become super popular, I'd say, about the last 2 years, but it's been around for 100 years, the concept of what I'm going to share with you. And I sort of discovered it by accident, and I'll talk a little bit about that 15 years ago and how that all kind of came about, because I think it's helpful to give you some context, and hopefully what I'll be able to give you today will give you an advantage when you leave here, wherever it is that you do business, whatever your business looks like. I believe this is the new way that we should be doing real estate, and that's all. The only thing that I could get out of today is potentially to have a positive impact on one or more people here, so I just appreciate that opportunity. To give you a little bit of oversight about what will be covered, this presentation only takes about 25 or 30 minutes, and I have some time afterwards, so I'd be happy to answer any questions. If something pops up while I'm presenting, by all means raise your hand and I'll answer it. Try and maybe just make a note or hold on to it until the end, because I can easily get distracted and lose my train of thought, and that could be messy. If you have a question, by all means raise your hand. If you think it could wait till the end, this only takes about 25 minutes. Just kind of hold on to it, and then we can certainly do a lot of Q&A at the end if you guys have some questions. So what I'm going to share with you is what Novations are. It's funny, a lot of people recognize me from maybe social media, or I've been very lucky to have some friends that have some pretty big podcasts and have had me on to talk. And people will meet me and they'll go, oh yeah, you're the Novation guy. And we'll start talking and they'll quickly explain to me like their version of what they understand Novations to be, and it turns out it's nothing at all like what I've been doing for 15 years. And I believe what I'm going to share with you today to be the best possible application of this tool. Now that may change 5 or 10 years from now, depending on what the market does and how populous it becomes, or if anything changes with regulation. But I've been doing it for 15 years, and I can tell you I know for this to be a significant advantage in my business for over 15 years. So I'm going to explain what it is, and I'm really going to do that by telling you what it's not. Because most of the time when I ask 100 people what they think Novations are, 99 times they give me a broken or kind of outdated explanation. I'm going to show you, once you learn Novations, how in a normal marketing and sales business and real estate, where generally we can find these deals hidden. So if you leave here today and you have a good understanding of how to do this, you should literally be able to go back and look at your sales funnel and pluck out a handful of deals without any additional marketing cost, without really getting any better at anything like sales or dispositions or construction. So I think that's why it's such a powerful tool. And then what this will likely be able to help you do is reduce any capital expenditures, because typically most investors I know, or business owners, when they want to do more business, they start by spending more money in marketing. This tool will give you the ability to literally increase your business by 25 to 50% without generating a brand new lead. So this is something you can apply to every single lead that nearly every investor already has in their funnel. So let's start by the book definition of what a Novation is. In its simplest form, it is a replacement of a term or replacement of an obligation in a contract, okay? So this happens quite a bit in residential and commercial real estate. The way I was introduced to it is that generally a lot of Novations happen in general contracting, large-scale government jobs, where someone's, let's say, building a bridge, and inside of that project, there's a rebar contract. And they'll novate that rebar portion of their contract to someone that may specialize in that and can do it quicker for less money, right? So they're novating that obligation in a contract, but they're still the general contractor inside of that entire project. So when I discovered it, it was in 2006 when I got started in real estate. And the first 2 years of my real estate career was I would buy deals, fix them up, and I would sell them on the MLS, right? I was a house flipper. And what happened when the financial crisis started to unfold, I noticed a very noticeable change in the way that I was selling my deals. Prior to 2008, literally nobody that made an offer on my flips was using FHA financing. Why? Well, if you look at what happened in 2005 to 2008, there was a lot of irresponsible lending going on. You could get no doc loans, which means you literally could say, I make $100,000 a year. The lender would say, your word is as good as gold. I don't need any statements. I don't need any tax returns. We'll give you the loan based on your word, right? Probably not the best approach. They had 80-20 loans where you could get an 80% first mortgage and a 20% second mortgage to cover 100% of the purchase price, and you could do that with as low as like a 520 credit score. Those loans didn't turn out to be very good performing loans. A lot of those were foreclosed on. So there was a lot of loan products out there that were super, for lack of a better word, liberal. And turns out that did not fly as the financial crisis started to unfold. So after 2008, like literally the only mortgage you could get was an FHA mortgage because it was government backed and subsidized. So now all of a sudden as a flipper, every single one of my properties, I'm getting offers from FHA buyers. Why does that matter? FHA has a lot of anti-flipping language and restrictions into it. The number one thing is you cannot enter into an agreement with an FHA buyer until after 91 days that you've owned the property. I was accustomed to flipping my houses. I was renovating them in 4 to 5 weeks. I was listing them, selling them in a week, and going to settlement, typically within 90 days. Now, because of the FHA restrictions that I'm exposed to, I can't even start the sales process for 91 days. So now I'm looking at probably 5 months total ownership. And at this point in my career, I was doing close to 200 deals. So if you start to think that you're going to keep most of your inventory for 5 months instead of 2 months, it created a big liquidity problem and a big cash problem for me. So I started seeking a solution. And by seeking a solution, I mean, I sat with my attorney and took all of my frustration out on him and yelled at him for about 3 months straight. Turns out it worked. And he goes, well, listen. He goes, it sounds like your problem is you have this deed seasoning issue. And I'm like, yeah, that's what I've been saying for 3 months. He goes, well, stop recording the deed. So I thought to myself, I was like, all right, well, I guess that would work. But then when I looked at not recording the deed and having to do renovations and the exposure that came with it, that was not a good fit for me. I didn't like the notion of spending $40,000, $50,000 on a renovation, not having the deed recorded, and then some of my lending relationships that wouldn't work either. Like if I didn't have collateral by way of deed, private lenders and banks wouldn't give me a line of credit or a loan against the property. So in that instance, it didn't work for me, but now I had this new knowledge, right? Like I kind of went through this boot camp of learning what a novation was, and I tried to make it work in my existing business model, and I chose not to apply that version of novations to fix and flipping. But simultaneously, I was buying houses off market, direct to seller. We did television, billboards, direct mail. I don't think when I started, Facebook was around yet, so I wasn't doing Facebook advertising. We were actually, I believe, in the newspaper. If that'll give you a hint at how old I am. We used to take out like half-page ads. In our area, like Sundays were the big real estate newspaper days, so they had like this little insert in the newspaper, and we spent some money in the newspaper. But anyway, so I would get these direct to seller leads, and I got this like novation hanging out in the back of my bald head, and I'm talking to a seller and they're giving me a price, and I can't make the deal work, and I can't wholesale it, and I can't flip it. And I like decided I was going to try this novation trick on a direct to seller lead. And long story short, I ended up making, I don't know, maybe $15,000 or $20,000 on the deal, never paid for it, never renovated it, sold it on the MLS to a retail buyer, and everybody was happy. So I'll get into the more of the mechanics of how that works, but that was my introduction to novation about 15 years ago. About my first 50 or so novation deals I did, I bought at public auction. If I were to describe like an ideal novation property to you, it's a mechanically sound property that's outdated. And in my market, and it may be the same here, as I travel outside of Pennsylvania, I realize a lot of places aren't big on public auctions, but at least in my section of PA, a lot of elderly people in estates and probates will go to an attorney and say, hey, we'd like to sell mom's house. What's the best way to do it? A lot of that gets sold by a public auctioneer. So if you've never been to a public auction, I would encourage you to start doing that. Even to this day, with as competitive as fix and flipping and wholesaling and stuff is, we do 2 to 3 novations each and every month from public auctions. all right? So anyway, that's how I got started. That's the definition of novations. Hopefully, the other thing I wanted to tell you is I promised you I'd tell you what it's not. Most people that I run into that have heard of novations before say, yeah, isn't that where you like partner with the seller and then like fix and flip the house and then you guys like split the proceeds? And while that I guess is a version of novations that may have been around for a while, there's two things out of those two things I don't like, right? So it's two for two. One, I don't like partners. They can be very challenging and oftentimes end very messy. Partnering with a homeowner sounds like a nightmare, right? I don't like the odds in that relationship. Number two, anytime I can make revenue without renovation, to me that is a very desirable situation. So revenue without reno is a great way to make money. I mean, that's the basics of wholesaling, right? So anybody that knows anything about wholesaling is actively wholesaling. We make money, and I don't have to deal with contractors and construction. No offense to the contractors in the room, but sometimes we just don't see eye to eye. They think it's worth $1 million, we think it should cost $12,000, and somehow it ends up being closer to their number and mine, and it takes twice as long as we agree. That's my experience, right? Shame on me. So that's what a novation is not, okay, in my eyes. I wouldn't encourage you to partner with a seller and do renovations on a house that you don't own that's potentially occupied and then have some like loose agreement about how you're going to split the proceeds. And what I think I can show you is the only reason people may be doing it that way is because they don't know how to do this. This is a much, I think, there's way higher ceilings with what I'm going to show you versus the fix and flip novation strategy. So, why should you pay attention to this? What does this all mean? So, who here is familiar with wholesale? Like knows a little bit or a whole lot about wholesale, right? Show of hands, you guys also are familiar with what an assignment is, right? If you're in wholesale, we all know what an assignment is. Can somebody tell me what a just basic explanation of what assignment is? Anybody?
Markup.
What's that?
Look at a contract. Signing your
Close.
position on the contract to somebody else.
Exactly. So the basic assignment is if I get a property under contract from Mel for $100,000, and I go to what's your name? Matt, and I say, Matt, I got a good deal. Give me $10,000 and I'll give you my contract for $100. So he's now in the deal for $110. He fixes it up, doubles whatever he wants, and sells it for $25,000 profit. So I'm assigning, not actually the property, I'm assigning my interest in the property. We call it equitable interest. So that assignment is where I sell Mel's deal that I got from her to Matt for a $10,000 premium, and he's in the deal for $110. Make sense? Everybody good? So why is that different than a novation? Remember, the key word is assignment, and now we're saying substitution. So like, Eric, why did I give a crap about that? What's it matter? You're getting caught up in words and definitions. That doesn't mean anything to me. Well, the key difference between an assignment to an investor, right, that wants a deal, still needs to make a profit, and a novation can be sold to a retail buyer, okay? So wholesalers or investors, what price do they pay when they buy a property from you guys? 70%, 75% maybe if we get lucky, right? What do retail buyers pay? 100%, sometimes more if they really love the place. So who would we want to sell our deals to? Someone that pays 70% or 100%? I want to sell to the guy that's going to pay the most. But an assignment's not a financeable transaction. It's not an arm's length transaction, which means the bank won't lend on it because you can't get title insurance on the investor. Does that make sense? Because when it passes through you as an investor in the assignment, they have to insure you in order for the bank to protect their interest in the property, and that's not possible. So it's not a financeable transaction. A novation, because remember it's a substitution, is now a financeable transaction. You with me so far? I go through this kind of quick because I've done it a couple times, but I see a lot of nodding heads. So everybody's pretty good up to this point? So that's the key difference between an assignment and a novation, is the key word being substitution. All right, Eric, seems cool, right? Like, what's the big deal about this? Why should I care? Well, I've taught this now to just shy of 500 investors across the country in the last 2 years. So I have access to lots and lots of people's numbers. I'm in a couple masterminds with some just major players. And one guy does 30,000 wholesale deals a year. You guys know New Western?
Yeah.
So that guy, Stuart Denyer, is in a mastermind that I'm in, and I get access to that dude's brain. He does over 30,000. Yeah. So, and I see everybody's numbers, right? So average across the country, typical, and yours may be higher, you may be a little bit lower, but generally wholesale profits are between $13,000 and $20,000. It was closer to 13 pre-COVID. It spiked to closer to 20, 25 in most markets when the market was going crazy, and now it's, in some places, it's sliding back down to like, more realistic human numbers. So what do I see in novations, right? So if we average 13 to 20, why should I do this extra work? Because it's a little bit more work. Why do I want to learn something new? Well, it's because the average profits on these are double. When you look at market per market, wholesale deal to novation deal, it's literally twice as profitable. Okay? So, and again, I'm not fixing up the house. I'm not buying it. I'm not funding it. It's still, I think I have a note down here. If you were to run into somebody in the parking lot, hopefully not when you're in your car, when you're walking, and they said, "Where were you?" And he was like, "I was at a real estate meetup." And they go, "What was that all about?" And I say, "Well, I learned novations." And they asked you what novations were, your response would be this: it's a wholesale style transaction, right? No renovations, no capital, in a property that's in wholesale condition. You guys know what wholesale is, right? Like, it means it's a property that's okay, it's not a huge fixer-upper, and I'm selling to retail buyers. Wholesale style deal, wholesale style property, selling to retail buyers. Make sense? Simple explanation. So how does this all fit into like a real estate business or a wholesale business? Here's the problem that I see. We saw this, I think, in most markets, again, with the people that I communicate with, is that right around Q1 of 2022, the market started tightening up a little bit. The craziness that we saw for nearly 2 years started to subside. We went from having 30 offers to maybe no offers, or 30 offers to 3 offers, or escalation clauses to I need 10 grand seller's help and a 20 grand discount, right? Hedge funds vanished literally overnight. There was a big pivot in the market. Rates went up, inflation reports were coming out, a lot of turmoil in the marketplace. So I'm going to share with you my perception of the old way, what I consider to be the old way of doing wholesale. I would say, if I were explaining to my 8-year-old that's in 2nd grade, I would say, Maya, the business of wholesaling is finding a needle in a haystack. And she would go, "Daddy, what's a haystack?" And I would say, "Well, you know what a needle is, right?" And I'd pull out a piece of hay or something, I'd show it to her. And then I'd have a stack of hay that was like this big. And I'd say, "I want you to dig in that big pile, and I want you to find me this little needle." Does that feel a little bit like what you guys do in wholesale? You literally have hundreds of leads to try and get like 10 deals, right? If we do a real good job, I can tell you, I talked to some of the world-class investors across the country, the elite. If they generate 100 leads, they'll get 10 deals. That's the best of the best. It's kind of shitty odds. I'm sorry. It's not the best odds, right? Like, literally, if I'm getting a 10% conversion rate, those are not the best odds. So wholesale generally is go out and find a needle in a haystack. By needle, I mean someone that's distressed, that has a property that needs a bunch of work, and is willing to sell it for 50 cents on the dollar. I would invite you to go out here in this dining room and just go up to everybody and offer them 50% of ARV. Like, how many people are going to say, yeah? You might strike out all night, right? If you walked up and started asking people, "Hey, I'll give you 90% of ARV," you think you might get a deal before the guy that's offering 50%? So the needle in the haystack of acquiring real estate wholesale is trying to find a stressed out dude that owns a house that's all messed up and just wants you to take it from him for 50 cents on the dollar. To me, that's a needle in a haystack. I've talked to tens of thousands of homeowners, and more times than not, they tell me to get out of their house, right? And then once you're lucky enough to find that needle in a haystack, that's a fixer-upper owned by a stressed-out seller that'll sell it to you for half of what it's worth, you then got to go out and sell that to another needle in a different haystack. It's a cash buyer that's crazy enough to think that they can take a house, fix it up, and make money 3 months later, right? So buy a needle in a haystack, sell it to a needle in a haystack. It's kind of crazy. But 3, 4, 5 years ago, very lucrative business, right? The market was very forgiving. The wind was at our back. We could buy from sellers and pay them more than they ever thought they would get because someone would pay me more than I ever thought I'd get. That's what the market conditions were, right? Over that time, how many of you have been in wholesale less than 2 years? It's a fair amount of the room, right? That business has absolutely exploded in the last 3 years. I mean, you literally can be 18 with a laptop and YouTube and learn how to wholesale in a weekend. That's the amazing thing about it, right? It's created this remarkable freedom overnight for thousands and thousands of people. That's the upside. The downside is it makes it hyper competitive for us, right? So anybody that's doing business, whether you've been in the business 17 years like me or you've been in the business 17 months, the business got harder and more competitive in the last 3 years. It's just basic economics, right? So needle in a haystack for me, selling to a needle in a haystack, it's challenging odds. So what do we find? The problem that I shared with you is the basic economics of wholesale. What did we start to see after Q1? Hedge funds dried up. A lot of investors, I'll do my best way to explain this. Here's how I'd explain the real estate market between like Q1 of 2022 and about, we'll just call it December of 2022. Sellers still thought their house was worth $1 million because they've been hearing on TV and the radio that it's the craziest real estate market we've ever seen. I mean, I've been in 17 years. What happened post-COVID compared to 05, 06, and 07 is not remotely comparable. I thought the market was crazy in 06. What happened this time, I'm telling you, they're not even in the same ballpark. Not even remotely. It was 10 times more crazy than 2006 and 7. Just nutty, crappy stuff. Appraisal waivers, I had no idea what an appraisal waiver is. I've been in the business for 15 years before that. It's now routine practice. Escalation clauses, 30, 40, 50. I mean, if you saw an escalation clause prior to COVID, it was like maybe 5 or 10 grand, and it's only because you underpriced it, right? So all they did was it escalated back to what it was really worth. These escalation clauses that we were seeing for the last 3 years were setting just ridiculous records. Like, and somehow they appraised, which back then appraisals were a problem, but I certainly wasn't going to complain. And in that environment, sellers still thought that their house was worth what it was worth in 2021. And the guy or gal that's going to buy it from you and fix it up is seeing inflation. They're watching rates go up. They're watching days on market increase. They might have lost money on their last deal or it sold for less than what they thought it would. And they're going, well, if I'm going to buy this and the prices keep going down by 10 or 15% per quarter, I better be conservative. And even though I think ARV is 250 now, I'm going to say, let's use 210. And then they bring you an offer and it's 30 grand less than what you're asking. Maybe 10 grand less than what you paid for it. And then we're going back to the seller, we're trying to renegotiate, they're upset, the deal blows up, we send a release, they give us a crappy Google review and everybody's pissed off at each other. Sound familiar? Like that stuff happens, right? So that's what was happening, and that's why I think what I've been able to learn and I've been sharing has become so popular is because you had unrealistic sellers and unrealistic buyers, and here we are, the poor saps in the middle trying to make a living. Right? Goes back to the needle in the haystack again. So that's the problem. We're neglecting the largest part of the market. If you look in any market, you guys are in Chester County here, like pull your records and see how many total real estate transactions traded in the course of a quarter, and look how small the off-market segment is. If you guys do 2,000 deals in a quarter, I bet 1,800 of them happen through a real estate agent, the conventional way of selling a home. And here we are fist fighting and trying to compete over the same little 200 deals that are all the same fixer-uppers owned by a stressed out seller that are willing to sell for 50 cents on the dollar. It doesn't make sense, right? So here's the current options. When you come across a deal that's not all messed up and the seller's not super distressed and they won't sell for 50 cents on the dollar, your options, the way that I understand them, are to pay more. That's generally not good business practice for us to just pay whatever the seller wants and hope for the best. I don't suggest you do that. Hope you get a buyer, shop it around, blast it to your list. I've seen some wholesalers exaggerate ARV when they send their deals out. It's a paint and carpet rehab that's 10 grand and it's got fire damage in the basements and 7 feet of water. Once or twice I've seen it, right? So that just doesn't work. Maybe you'll get lucky and sell a deal to some rookie investor who doesn't know any better, but that's not a sustainable business model. And you're taking an awful lot of risk hoping that somebody's going to pay too much. I don't suggest that either. Or we get the lead and I'd ask for you guys someone to play along with me here. You guys, there's a couple hands here said you guys do some wholesale and stuff. You guys generate leads from sellers and, okay.
Yep.
If someone were to call in, and anybody can answer, and they said, hey, I have a pretty nice house. It's not perfect, but it doesn't need a ton of work. The kitchen and bath's only like 6 or 7 years old. I've taken really good care of it. And I'd like to get about 90% of what it's worth. What generally is our response to that person?
Not enough room.
Not enough
Let me
fit.
talk to my underwriter real quick about that.
Yeah, and then we come back and we go, hey, listen, I talked to a team today that I do some training with. They generally don't even make an offer on that house, right? Because their point is that I don't want to upset them. I'll put them into follow-up and I'll keep in touch. And if like 3 or 4 months from now they change their mind, I'd like to have, he said, I want to keep leverage that 3 to 4 months from now I may be able to buy it because it didn't piss them off today. And I was like, well, what happens if you tell them on your postcard, your cold call, and your text that they'll get an offer right away, and then after you talk to them for 10 minutes, trying to get an offer out of you as the wholesaler is like pulling teeth. All of a sudden now we don't want to give up an offer, and on our postcard, our television ad, our billboard, our TV ad, we told them they could call us and have an offer in 2 minutes. I don't like that. That lacks integrity, right? We say one thing and we do another. That's called a lack of integrity. So what I would tell you is that typically what we do is most people will reject that deal. I can't help you. Sorry, we'll keep in touch in case you change your mind. But let's be honest about this. Anybody just wake up one day and go, you know what? Matt was right. I was way off from what I was asking for my house. I'm going to call him back and take 90. They don't change their mind. What happens is something happens in their life or with the property